Okay, see if we can get some of the good stuff. Is she gone? Is she gonna play nice? No. I don't know. Something about running back inside here just looks nice. Potential 80 points. Ah. I feel so emotional about this trade.
Yeah. No emotion. What you talk about?
No, as in I want to sell this, but I just don't want to. I think I'm not fully accepting the risk, so I'm just gonna sell it. What time is it? 11:47. I'm gonna sell it now. It's probably the quickest trade I've ever entered in a long while. This is 100% guts, feelings. The analysis is there. Hey. Something about the time feels off. Hey, what's up? Hmm? What's up? Yeah, I know. Watch me trade. Yes, right here. Yeah, I sold this. This is my entry. What do you think about it? Don't think it's good? I sold a down candle. It's been a while since I did that. Juice? Up candles are usually what we sell to avoid entering and then this pulls back on you. Yeah. Gold internal buy side. wait. Nas took my $90. Or was it $20? Hmm? Yes, this trade, this trade stopped me out. What do you think about it? Hmm? Hmm? You think I can get another sell on it? Let me check. Solid Sun. It's interesting. Somebody's asking me a very interesting question. Hmm? My nose? Mm-hmm. 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 Really? Can pass your tablet? Pass your tablet. Thank you. There we go. Much better. Okay. So I'm still feeling like selling this. I still like the idea of going short here. What's stopping you from entering now? Let's move this to here. Let's take off a couple of these lines. Oh, M15 close. Oh, that's the rejection block. Okay. I like the rejection block idea here. Didn't see that before. I was buying stocks. I was buying stocks. Okay, not going to be a stickler for precision for this one. I'm just going to use the same parameters. $20, 27 for safety. I don't feel like I'm mentally in a place to be trading now. I'm second guessing myself too much, or I'm distracted. So I'll either take another small loss or recover whatever I just lost, and then end my day. I'm distracted. now. Okay, so let's frame this as a defensive trader. Yeah, I'm gonna play defense today. So that's my entry, and that's about 20. Let's push it to 25 right there. So I'm looking for 11,330 on as minimum, and then I'll potentially walk away and not use my brain too much. I have to be realistic. I'm recognizing that I'm not as tuned in as I want to for this trade. So when you're not tuned in, you're likely to miss stuff. So since I've already taken one loss, logically, you're going to want to go in and recover losses and stuff like that. But if you know you're not tuned in to price, doing things like that is likely going to lead to consecutive losses. So since I've acknowledged that I'm not in the best mental state to trade, I'm going to be playing defense on this trade. In a perfect scenario, or in a perfect world, if you like me, I get a 2R. So all of that. But if not, but is this even 2R? It's about 20 points. And that. So I'll do the same take profit potential, but I'll be managing just a little bit more aggressive. I think the PM session could trade lower though. My only other thought process is my time of entry. That's the only thing I'm looking at. My time of entry might be a little bit off. But instead of overthinking it, be aware of your mental state while trading. Okay. I'm thinking about this too much, so I'm going to just move to a different pair to allow myself to get more in tune with the price action and what's happening here, which is a bad thing to do. It's always a bad thing to enter a trade and then do analysis. I didn't do enough analysis prior to entering the trade. Mistakes that we're all guilty of. Entering and you say, oh, wait, this could have, would have, should have, whatever. So, for us to go lower, I'd need to see something on this chart that suggests DXY could trade higher. What do we have here? We have liquidity. We have down candle, a big down candle. So 50%. No close below 50% is a good sign. It's a good sign. But we have about 10 minutes before this guy can do what it wants to, which means in that window, anything can happen. Trade of the day. Take profit would have been butchered. But yeah, I'm not going to take another trade. I'm just going to do this and that's it. As pretty as this looks, as pretty as this looks, mentally,
Wow, star, wow.
this looks good. This looks good, but because I was doing a couple things before I opened the chart, I know that I'm distracted. I know that I'm not as in tune to price as I'd like to. I didn't get to the chart, spend a couple times looking at the price action, and then trade. I just opened the chart and I'm like, yeah, this looks like a good trade without enough analysis. So I'm thinking out loud because I know that's something everybody does. I find myself liking gold a lot these days. As much as, I mean, almost as much as I like UCAD. Almost as much as I like UCAD. So looking good. Since this is now a key level, and we have all of this running down here, I like this. I just don't like them creating wicks. I don't like the idea that they could create a wick here and then pull back on it because of how close my stop is to here. But the risk is managed. I think it's like $20. So we should be fine. And either way, we'll still be fine. 617. You okay? And I moved away from my trading area. All right, so this is the DXY chart that we're looking at. Looking good, looking good. I think I was at, what's it, 639 before? Okay. So we have the potential to see this guy move. This should be what my old mentor calls the trap or the trade. When this M5 candle gets crazy. Usually does it around the third minute. So this is 12:05, about 12:08. We'll check to see if this guy is. This is not based on time. It's based on something else. So in case you're gonna take what I say religiously, let me put that disclaimer there. Oh, somebody says my stop loss. It is 389.2. I've heard these Cocomelon songs so many times that I just find myself singing them, even though I've never paid attention. Oh, I have, but when you hear it so much, you just know the lyrics. Okay, one more minute to play nice, or we start losing interest in this guy. And it becomes a question of, do I just say small loss, still at objective, and be done with it? Or do I accept the risk and walk away? Hmm? All right, so here we are. We're at the 3rd minute. We're at the 3rd minute in this M5 candle. So I want to see it make a decision right now, so I can make a decision as well. What would I want to see on this time frame? These bodies inside here, I like to see price trade below these bodies again. If it stays like this, then this becomes kind of like a rejection block idea, and then that's not ideal for my trade. So solid close, not wicking below here again. Solid close. Solid close, and we'll be fine. This fractal does look nice. We have liquidity here, taken, distortion, high and low, which makes a break below here needed as a fast move. Then this red line is just perfect because it's right at the opening price of this candle. So that 1 hour objective looks nice. And let me just confirm something. Bam, bam, bam. J12, 610. Okay, I wanted to check if the objective for today was 610 or 620. Didn't remember. We're also actually still above the. I know Eddie's going to jump in and say, not everyone.
Yeah. Not everybody there, you know. Not everybody there, you know.
So this is now a new M5 candle. This is now a new M5 candle, and this is the area that we need to see a solid close below. Taking this high here. Let's just keep them off because I don't want them. I'm going to take them off either way. Taking this high shouldn't be done with a close. So like the same idea like a rejection block would be what I'm expecting here. But again, the longer we stay above these lows inside here, the longer prices likely to stay inside here. So while my stop is not exactly at that high end, I'm fine with that. This is so to put it simply, this is not a trade I'd watch, because watching it on this time frame, there's too many things that you have to pay attention to if you're scalping. You have to watch the fact that this is a M15 rejection block. The order block is all the way down here. These are short-term highs below the candle that trades into the order rejection block. So the fact that we entered here means all of this that we're seeing right now is logical, and we basically entered early. So this candle, we need to see price take this. But because of this time frame, it's going to look like a whole lot of things happening. And even though the risk is managed, it's a little bit unsettling if you watch the price action like that. It's better to get a clear confirmation by price trading below here. What? Yeah. Oh, I wanted to say one thing before. So what I was saying is why I'm looking at this through M5 and not M1 is less data. With this, there's too many things to look at and invalidate if this then that. With M5 chart, we're going to focus only on where's the M5 candle closing and either stop or get below here, and that's it. Alright, so see what I mean now? It's basically staying inside here on the M5. So if we're on the M1, all of this just looks logical, right? Because if you flip from here to here, 50% is coming in somewhere in here. So this is like a premium run. So perfectly normal. But this is a whole lot of data to be looking at and watching the candles. And then the more you do that, the more you start creating theories, which are not necessarily logical, but you start seeing stuff that, quote unquote, makes sense. All right. So just that's why I'm staying on M5 and I'm just allowing the M5 to move. While it's still inside here, I'm not going to analyze it. I'm not going to do anything. It's either going to go above here and crash or it's going to stop us out. But there's nothing inside here to really analyze. It's just where are the candles closing. That's important. So that's why we're quiet. And I'm checking the chat for questions while this trade is on. Oh, all the time you weren't hearing me. What I was saying is, now that this has stopped us out, and I know for a fact that I'm not in peak mental condition to be analyzing right now, I'm not going to look for an entry immediately. I'm going to allow myself to get back in the mood or in the zone, however you look at it. But you don't take trades when you're not in the best mental state. And for me right now, I could feel that I was not in that state earlier. So we could stay on, any questions we could answer. If you want me to look at any pairs, sure, we'll do that, but I'm not going to take another entry right here. No questions. Everyone is just quiet, looking at price action too. Okay, fair enough. Everyone is still quiet. Nobody ever has any questions. That's funny. All right, so let's take a look at what's happening. What time is it? Lunch hour, 12:22. Let's take a look at the M15 charts. This was the order block. Chop fest. Price has been held. I don't think I've ever traded silver. What's the price of silver? 1922. I know what the required margin is like. It should be less than gold since gold has a higher price. Consolidation. Wow. All this time I was talking and nobody was hearing me. Oh gosh. Which means you heard none of what I just said. Oh god, that was funny. That was absolutely funny. I've been talking to myself for the last couple of minutes, outlining why I'm going to size up, outlining why I won't enter here. It was recorded, but then I'm doubting if or not it was actually being recorded because it looks like I was on mute. So remember when I said my PC froze? When it unfroze, it muted me and stopped the call, but I didn't see that. I couldn't see that. So yeah, I'm thinking of going short at 11,390 here, and I'm going to size up and accept the risk. I'm going to size up here and accept the risk. Yeah, taking too long. If I'm accepting the risk, I shouldn't be that worried about precision. I shouldn't be that worried about precision, but I want to get aggressive here because I'm above the daily target. So, worst case scenario is I break even or I just fall back to the actual daily target. No need to play precision. And M5 candle just started, so about 2 minutes. 2 minutes, and I might trade very aggressive today. So I'm telling you now, I might go crazy today. Today feels like a go crazy day. This price action is taunting, and I think time is the reason. My only concern now is the next 10 minutes is generally where we get spikes. So the full $60 risk is what I want to put on here. I think we've had a flawless 2 weeks. So one day in red shouldn't be that big a deal. But it's not for me. But going into the close of this M5 candle, we could start seeing the market volatility increase, which is asking me to go M1, but I don't think it's absolutely needed yet. I'll only go M1 if this M5 decides to spike low, higher instead of lower. Somebody said no. Zoom out a little bit. I'm a little bit too tunnel visioned on this. Let's frame best case scenario. And let's allow this part of the move to do what it do. Oh, this is so slow. No sponsorship. What's happening? No algorithm pricing. The definition of boring. Absolutely boring. Absolutely boring. And this absolutely boring trading is having me lean towards being more aggressive today. It's about half the risk I intended to take floating. But this is also a trade that I'm not going to overread the price action, right? This is just acceptance of risk. But yeah, absolutely boring. This is not fun. You know, some persons say trading shouldn't be. At least reading the price action should be fun. When it's like this, how do you read that? Yeah, the new hour is about to start, and the possibility that this is going to stop us out is increasing greatly. But again, this is a risk I am willing to take. Look at this. Last time we closed above here was this, and then it's just no real confirmation that it's bullish, no real confirmation that it's bearish. On this time frame, it's waiting, really. That's all it's doing. Which opens the door for what you call them institutional levels to be traded to. $11.5 is very far, so I'm not thinking $11.5. I'm thinking 11,200 down here. Looking at it like this, it looks like I'm picking tops. Gotta be honest with yourself. That's the only way you can learn from your mistakes. If it looks wrong, so my rules are kicking in. Rules about sponsorship. If you enter a price move or an expected price move and you don't see immediate reaction, it means you're likely to be offside. That's what it usually means. It reacted here, but then it reacted the other direction. So feeling like I might have to go scalp today. Yeah. Just imagine. Mm. 12-1. Oh gosh. I'm not sure if you're on the call, Junior, but it's at 410.6. 11. Matt, you're being aggressive for both of us. You're being aggressive for both of us. That's what this. I'm not going to the M1 chart, because if I go to the M1 chart, I am going to feel inclined to be aggressive. I mean, I can. There's nothing stopping me, right? Absolutely nothing stopping me. Absolutely nothing stopping me. I love to see that you're doing it. Oh, love to see that. Love to see that. Um, Ed with the jokes. Ed with the jokes. There we go. Just got my notification. Your fasting period is complete. Bon appetit. Okay. What do we have here? It's now 1. Lunch hour is over. Lunch hour open is this candle. Let's see if we can take this candle. This candle's low, since it's the start of the lunch delivery, which basically held price in a sideways consolidation. So I don't want it finding any kind of support ideas at this down candle. Right, this is the start of this run up. This low means a lot. They take the low and retrace, then I'm fine. But taking this low is important. This down candle, it's got to go. Take this blue line off. We don't need that anymore. Take that off. We don't need that anymore. But yeah. Probably the start of a new M15. So we're looking good. So for the guys in the one-on-one, if you're on the call, the Saturday session, rewatch that. For the guys who not in my one-on-one, we have a scenario here where we have a clear drawn liquidity. So this is a lesson in trade management. This is the last time we had a stop hunt all the way down here. So after the stop hunt is done, all the lows inside here that are higher than the stop hunt are very likely to host liquidity. So when you look at price action like this, you want to look at where did price create a low and push higher but didn't take out. It would be this, pushes higher, comes down here, liquidity is taken on this spike, then higher again, liquidity here, all of this. This low, we can see all of these lows inside here were taken out here, which means after the stop hunt, which is this candle, this is the higher low that was formed. When you have these levels outlined, you get a more logical approach to taking partials. And since I got up from my trade station, I need to go grab my laptop, so hold on a sec. I'm back. What's happening? Still haven't taken the low of the down candle we wanted to take. Let's do that. Defensive trading. So that's 1R. That's 2R. 3R. So 2R to the first partial objective. 3 to the second. Or obviously not. Well, I'm not planning on holding the full positions here. Going into 130. Oh, yeah, going into 130 is where we usually get more volatility coming in as we prep for the PM session. On a more aggressive tone, once we take this low, we shouldn't come back. We shouldn't come back. So if I was scalping, like with the challenge, I'm doing like 1 or 2 trades daily. If I'm usually scalping or trading, I'm taking anywhere north of 30 trades on a daily basis, back and forth, back and forth. Stuff like this, like what I just said, when we take this low, we shouldn't come back. Those are stuff I use to play reversals or retracements. But at the moment, lunch hour opening is overlapping with that. I think it was a rejection block of an M15. So we are waiting to see them destroy that. Let me check the chat. Oh, it makes sense. I mean, the only for Jesus, the only thing about Nas moving lower here that's not ideal are the two things I mentioned I want to see. So that down candle over there at the lunch hour, that being taken, and that wick right there being taken. Those are the things that makes holding on to a short position favorable. And none of them have taken place as yet. Which this is going to be like a point where you consider market structure shift. Until price trades below there, they'll play above it. But once it takes it, it's game over. So this is patience and a little bit of psychology. Patience and a little bit of psychology. Of course, if we were worried about the account, like most persons probably are, once you get your short and you can recover half of your losses, feel free to do that. I am leaning on a more aggressive approach today. Very aggressive approach. I was about to say something, yeah. I think when this dropped, it dropped about half of our risk, which would have been $20. So if you're comfortable as a scalper and you have directional bias supporting your trades, you can take short targets with quick scalps. So just imagine you're looking at this low to be taken, and let's say 10 pips. When price is trading higher, you could set like a sell stop here and a 10 pip target. So when it breaks that, it just hits your 10 pips pullback, then you could start thinking of maybe entering a manual position. But all of that is just for scalping and doing a lot of trades. Slow price action invokes emotions. So slow. So we have two M5 candles resting right here after we took out this low. It's not a good sign, because if this is going to open this close to this high, it means we could see them dip and push. So this candle's high is important and not trading above it. I forgot I was putting together an order, so I just checked if I did confirm it, and I did. Talk about slow. Okay, mental capital management. We've been in this trade for a while. You must be feeling some type of way. Right, I'm feeling some type of way right here, because it's not moving and it's not confirming and it's not invalidating. So I usually wonder, how is it that you spend so many time away from the chart, or so much time away from the chart, then enter just at the right time when price wants to do this? You must be crazy. And I used to play with my psychology a lot. These days, I think about, if I enter and there's no sponsorship, so it's not moving, I start thinking about what frames a scenario where I'll walk away from this trade. I don't want to see them trading above this high. I don't. This low, and then this candle's low, and I'm fine with that. So I think this is about 20 pips now, close to it, or close to the 1 hour marker, which means it's probably floating about $40, which recovers all the losses et al. So that's under normal circumstances, that would have been a logical place to partial and play defense. Take half off, cover half the losses, be back above 600 and we're good. Why I'm not doing that is these blue areas highlight highly probable price levels that we're going to trade to. I want to take partials at those areas. Maybe not so much that 1 hour level, but these down here. But for your psychology, be okay with managing. You get paid for your decisions, and I get paid for mine. So we have 3 minutes into the new M5 candle. We've already taken this low. Where's the speed? Where's the well-deserved speed? Check the chat. Great question. What was my psychological shift that led to consistency and understanding of price action? It started by stop trying to trade the market and trying to think like the guys who move the market. That's where it started. Then after that, I wasn't hitting rock bottom. After that, it was just normal stuff. My thought process right now is to sell above this low, reduce risk on both of these positions. That's my thought process right now. So if this M5 candle closes and we trade back above here, I'm going to sell that with my stop right here and reduce both stops to there. Right at that broken line, if it trades to it, I'm going to sell it. And tighten the stops. Such a tease, flirting with what I want. Either you give me the entry or you give me speed lower. Come on. Let's not overthink it. If this, then that. And I should be able to reduce the stop on the original position now. But I'd rather wait for this candle to close before I do that. So speed. Because in the next 14 minutes, we're likely to get more volatility. So if we move away from here and we get to take partials, we could potentially Scaling with lower risk and just compound the setup. But at 130, we shouldn't be here. We shouldn't still be trying to recover the losses. At 130, we should either recover all losses and then chilling, or it's away from here where partials and break even, and then just vibe. Hitting rock bottom. The what I learned from hitting rock bottom in my trading is stop breaking your rules and stop being fearful. So when you take a loss, you usually start thinking about all the risk management advice you see online. All the guys who tell you to all the things that you can think about. I realized that I would take a loss, and then because I'm following somebody else's risk management and not sticking to what makes me comfortable, I would end up just doing stuff that I shouldn't and getting frustrated. Know thyself. And know thy model. Yeah, fear of losing cripples you, right? Fear of losing is a whole lot of things. And speaking from experience, when you realize that you can, or when you realize that your model is somewhat consistent and you don't have a live account, you kind of sit with yourself and you say, I'm going to put a small amount in a live account and then start trading it. The first loss you take, you go bonkers. You start thinking about the fact that you needed that money for something else and then you took it out and now you're going to lose it. It's a mess. It's a mess. But it's also a good thing because it's one of the reasons why about a year into my trading career, when my profitability wasn't exceptional or anything, I would pull back all my initial deposits until the broker says you can no longer use this withdrawal method. So for my broker in particular, if you use like a debit card to deposit, let's say $200 or $100, once you withdraw $200 back to your debit card, they no longer allow you to pull to that. So you have to use like a wire transfer. So that at that point, that was a turning point for me. But yeah, good stuff. So now we're going into 130, 2 more M5 candles. Remember, this candle's low is what we're looking at. That candle's low is what we're looking at. And I think we've recovered all the losses here, or almost recovered all the losses. So risk management says that we should be at break even just to control the bleeding. But because I haven't gotten what I want for clear shift. What's that? Because I haven't gotten what I wanted for a clear shift. And I don't like the idea of, if I'm going to be holding a trade long, so let's say this clearly. If I'm going to be holding a trade for a longer move, I don't move my stop until there's a clear market structure shift. If I'm scalping aggressively, once I find an area to take partial, then I'll move this. So first objective met, this is usually where we start taking partials as price trades into it. So if you did what I did, we should be able to scale out, but yeah, we should be scaling out once price is trading in. You don't want to be scaling out when it's retracing against you, because then that's slippage. So from the 1 point, I'm just gonna take half and break even.
Me not take up nothing.
That's fine. That's absolutely fine. Like, I'm literally telling you it's fine. But at least remove the risk.
Me a gun drill, I'm not take up nothing.
At least remove the risk. When price is trading into your objectives here, I probably should have kept the stop above here, but that's fine. So I took partials, right? So no. Here, I took partials. So I'm back above 610 and I have $30 floating. So we're back at $57 for the day, which is around about where we were to start. Next, I'm going to take this box off, the 1 hour box. So the 1 hour box is off, and we're now looking at this and the willingness to stay below here. If we had gotten that aggressive entry, then it would have been very nice. But it missed by like inches. Let me check the chat. Okay. Somebody at me. Hola. Yep. What I like about this trade the most is that this is almost original risk since we doubled up.
You know what happened, bro? You don't know what happened.
What happened? Did you double up?
Double up what?
Lot size.
Fuck no, man.
Oh, okay. All good. Like, I'm not saying that you should. I'm just saying.
No, I should have. I wanted to, but I didn't.
Hesitation kills dreams.
No, it wasn't hesitation, you know. It was speed, man. Speed. It is your fault for that.
But I mean, if you really wanted to, I think we entered here. If I go here and we go to let's take this off and go to like a M1. We entered here, suffered all of this. So if you actually wanted to enter again, opportunities were there.
You have to remember, I'm not at the screen, I'm driving, brother.
Bro, you're always driving.
Bro, busy, man.
Fair enough.
Right now, I'm at home.
Nice.
So,
what's this? This is
right now.
What? I'm looking at just kind of viewing M1 for the intricacies. Stops around here, which means this would have been order block. Trade below the order block here. I don't remember if we took this or not, but that would have been first entry. Second entry here. Let's review this on M1 and see what we could learn. This here is obviously going to be best case scenario in this fractal, which means this high and this low frames a market structure shift. So this is a market structure shift. So that market structure shift is your dealing range as well, because sell side is being taken right here. after buy side has been taken. So we have an order block. There's no BPR inside here, but we have an order block and we have displacement, FVG. So, I mean, we could even argue that this may be ICT's YouTube model with the displacement and the FVG here. This would have been the market structure shift. So selling here, perfectly logical. But then the order block is here. M1 intricacies. So we have the order block there, 50% coming right here, buy side liquidity. Fading, that would have been fine. Even if you waited until this up candle, well, it would have been this up candle, gets traded below. If you waited till this up candle gets traded below here and then sold the retracement here, we'd still be selling right here. So even with the M1 logic and looking at the price action, we would still sell here. As pretty as this looks, right? That wasn't a part of the model. That's not what we're trading. So we're good. Looking at this structure, I'm going to leave it to you to recognize all of that M1 fractal from a structure that looks like this. And then, of course, important is identifying what levels do you pay attention to. Why did I not? Well, clearly, wouldn't have been that. Like this level here, we outlined why we want this level. We outlined why this low and not this one. Why this one here and all that good stuff. So those are things to be aware of. Probably pushing close to 700. That's way above targets. Way above targets. And Dwayne was calling me. There. Matt, I know you're holding, Matt. No, I know you're holding for sure. Well done. Well done, well done, well done. I like how you're playing with the fibs as well. Can we get another entry if it retraces now to the M5 OB? Nice, nice, nice. Let's see. Bam. You mean all the way up to here? I'd still sell this if it comes back, but I wouldn't use the 2 lots. I'd probably drop to a 1 lot. But why? Why? Really, really why? This trade is not even worth watching, if I'm being honest, but I like the target. I like how seemingly clear the price action is. And we're going into 130 now. So volatility injection. That's right. Person with the Telegram handle IC. That's right. Imbalances are for refinement. You have an order block, clearly defined order block, following all the rules, and you outline the order block range. When you drop to lower time frames, you should be looking for imbalances inside that order block. Write that down. What's everyone saying? No questions. All good. All right, let's see if we get that volatility, that 130 volatility. Take a look at inside here. Let me remove the trade. There. See, no imbalances inside here. I like that. So speed, 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 so I can second partials. The faster, the better. And again, if I was scalping, I'd be taking partials right as we're trading through that. Right there. Aggressive management. Scaling out right there. Look like a Macamaker model, in a sense. Not looking at all the way down here, just looking at this part. Which opens the door for here. Do you really want to come back above here before going lower? You want to be a naughty Nelly. Okay, Naz, come be a naughty Nelly and see what happens. Come be a naughty Nelly, Naz, and see what happens. Well, yeah, 50% consolidation, not ideal. I don't like it one bit. I don't like it one bit. What are we looking at? Partials, man. I'm going to take partials here. This is... Wait. 35. This is 135. So... we have... What is this? About 20 more points can hold out for. Minimum. Minimum 20 points can hold out for. But again, I'm only saying that because I'm holding for a longer move. If I was scalping, I'd be scaling out, waiting for retracements, loading on again. But I like the idea that we could run here first before retracing. Let's go to M5. Don't want to get lost in the M1 sauce. So trade through here now, and I'll consider trading my stops low. Just to lock in somewhere. Kind of like that idea. So this is M5. Expand below this low. Expanding below this low is nice. Kind of like here. I'm going to take this off. So you remember what we're looking at here. We had this candle's low pegged and this here. We mentioned that once it takes this low, it shouldn't come back higher. So now if you look at that, you see how it closed. It's a shallow retracement and I was off by about a pip. The high is 71.8 and this is, well, not a pip, 73.3. I wanted to short this again. Ambitious. But yeah, the longer this does this, I'm losing interest in holding this trade. This is already efficiently traded, so I don't want to see it pulling back. I'd like bodies below lows, bodies taking lows. If you form a low, bodies below the low. You form a low, bodies below the low. This one is next. This, however, was that candle that we were viewing firstly as our order block, which is why I was suggesting that we could get a retracement above this right here. But this is greed. This right here, what we're doing now, is greed. Yes, it's analysis, but it's greed fueled. We want this, so we're unwilling to accept what the market has given us. Recognize it and be content. You have to know it when you're being greedy. So let's square at 50, 620. So if I take out $30 from this, that's about 60%. Brings us to 615 and leave the rest floating. Then there's that part of me that says the moment I take it out, they're gonna spike it. But I don't care. I'm taking partials right here. This circus has gone on long enough. I'm gonna take 80% off, 0.8, bam. There. I'll entertain secondary entries afterwards. And if it gets to take objective, then great. But this analysis or this trade management was fueled by too much ties to the outcome. I wanted to go there, I wanted to go there, I wanted to go there. Get yourself under control by following the rules. And like I said, 90% of the time I do that exactly after I take partials when it drops. But then there are times when right after partials it comes back and stops you out. Either way, we're fine. Up $99 for the day, $92 for the day. So roughly about $8, and that puts us to $100. So caught up in gold, I didn't look at, in NAS, I didn't look at anything else. This is just messy. This is where we saw the XY last time when we wanted that push. This is just messy. Yeah, unclear price action on this time frame. Price has been held. This low, this high. Watch them. That's been distorted. On this time frame, NAS is being distorted in premium, which means a run to the highs is just going to shake out early sellers and then push. And a run to the lows is just going to catch the guys who want to buy this retracement. Either way, objective for the day has been met. Life is good. You took partials?
Nothing.
I know you took partials.
Don't forget what I told you.
Yeah.
If I do a 1, I'm stuck.
Which is why you should have done the 2 like I suggested. But this is not financial advice. This is just me thinking out loud.
Me than 4. I am 2.
You did 4?
Nah, that would be irresponsible of me.
I was about to say, wow. So yeah, none of these calls are financial advice. This is just you guys listening to me think out loud. One of these days, I'm gonna entertain this guy here. One of these days, I'm going to entertain it. My only concern about this is I feel like I have to, since I've never traded it excessively, and while I can read the price action, just trading it off the bat might require me to do stuff that I've not talked about or not spoken about. So that's why I haven't really paid attention to US30 or this guy. The price action is similar. Then there are things that I need to look at that makes me comfortable if I'm going to trade a new pair, just to make sure the rules are the same. Or let's say for NAS, I know that a 20-point stop is perfectly fine, but a 20-point stop on this is probably ludicrous. So I don't have enough experience managing trades like these, so I know what the stuff is like and how to manage risk around them. That's why I play in my sandbox. But when I get there, I'll probably entertain some other stuff. Gold I've played with extensively. Gotten lots of broken hearts from this guy. Lots of broken hearts. And UCAD, I've started liking UCAD. My only thing I don't like about UCAD is that it's, what's that word? I don't know what's the actual term for it, but you know with like your USD, if you put a one lot on and you get 100 pips, well, you get 10 pips. That's going to be $100. With UCAD, if you put a one lot on and you get 10 pips, you're probably likely to get less than $100. I don't know what that term is, but that's why I don't like UCAD a lot. I like it for analysis, and I'll trade it if I'm just trading. But if I'm, like I went broke and I'm going to start a brand new trading career, UCAD won't be on the make money list. It's going to be on the build margin list. AU UCAD, perfect if you're starting out a small account because it gives you the opportunity to use less margin, and then less margin with decent lot sizes enough to help you scale up faster. So yeah, whenever I'm flipping like a $5 account, I use AU to start, and once it gets over like $15, I'll jump to NAS. Let's check in the chat. Spectacular.
Where you at now?
Balance.
Balance.
This is where I'm at right now. And NAS looks like it's retracing. Yep, NAS is retracing, but this retracement means absolutely nothing to me because I managed my trade properly. Cough, cough. No comments, Ed? No comments?
You try and mock me?
I was joking. No, let's talk about what's happening here, right? And a little bit of psychology lesson that we did. See where we exited? Right here. The exact price was 340.8. So we got the opportunity to exit right here because as price was trading lower through the level, we talked about exiting there. But we basically exited somewhere here, and then prices were tracing all of 30 pips against us. This is where greed starts hurting. This is where a person starts saying, when it gets back here, I'm going to do what I should have done. But an aggressive person like me would have said, now that it's retraced, getting back below here in an underlying bearish market, I could make another 30 pips. But I think I did enough aggression for today. I'd only be more aggressive if she didn't play nice. If she didn't play nice, I'd have to go to M1. And then all of that, I would have seen that on M1. So I'd have been entering. Maybe this would have stopped us out, but then I would have seen this, so I'd have gone short here in M1 for that move low. And I don't know if I would have taken this again. But here's that level that we wanted to short on the M5. We were talking about it. And there, it's also that low that I mentioned we shouldn't go above. Yeah. But guys, there really isn't anything else to do in terms of analysis unless we're planning on taking another trade. And I think we should be at, today's day 11 and we're at day 12 target, if I'm not mistaken. Let me just check. So why are we still here? Why are we still allowing winning to suck us in? 690 was the target. If I had known that 690 was day 13 target, all good, all good, all good. It's a good week. It's also the time of the year when most of the liquidity is coming onto the market. So leaving my stops in play, and this is best case scenario, but yeah, I don't think there's anything else to say for today. So until we meet again, feel free to update me in the price action on the off chance I'm not looking at the chart. Feel free to post in the group and let me know if we got stopped out, if it got to the 3R level, if we got here, all that good stuff. And same time, same place tomorrow. I'll upload this call because it's got a whole lot of psychology stuff in it, I think, if I recorded it, if it's still being recorded. And yeah, enjoy the rest of your day.